What's up, everybody? What is up? I see a couple of people piled in. I'm going to give everybody a little bit of time to join in, and feel free to tell me where you guys are from. That would be wonderful. This is going to be a fun class. I'm so excited to talk about bear trades and what we're going to accomplish tomorrow for our YouTube live. That's going to be fun. Who had a great day trading SPY today, or any other tickers for that matter, bear trading? And what a perfect day. I'd set aside Tuesday, not knowing that today would be a bearish day in the market, but I had set aside Tuesday to talk about this with you guys. I just got flooded with DMs, and I just wanted to kind of consolidate and do this all at one go. So yeah, just gonna check in. Hey T, how are you? It's so good to see everybody here. All right, Tasca says, hi, I'm here, hey. Okay, cool. Okay, so let's get started. Bear trading in general, everybody is super afraid of for some reason, and I get it. You know, it's not everyone's, I guess it's not everyone's cup of tea. You don't always think that the worst is always going to happen, especially when it comes to the stock market. I mean, historically, we've only gone up, up, up. Sure, we've had pullbacks, but we've never, when was the last time you heard, oh, the markets went to zero? I mean, you know, those are rare events, or as a matter of fact, that's never happened. So yeah, but anyway, you are just naturally wired to think that the markets are going to go up. Now, with that being said, how often, I want everybody to type in a 1, how often have you gotten into a trade and you feel like someone's just watching over your shoulders, and it is just then that you will get stopped out? It's just at your stops. So let's say your stop is right over here somewhere, and you got into a trade and thinking, oh, it's just going to go up, up, up. Well, it comes right back down, gets you, and then continues to go higher. How often does that happen? Type in a 1 if that happens to be you. That happens to me all the time. Well, more often than not, more often than I would like it to be. So the markets like to trick you a lot. And today happens to be a great, great day. And I'm so glad we're talking about put options and when to hedge and what strategies to use for put options, and on the chart, when to exactly spot the right time to buy puts, or maybe get out of your longs, or do covered call positions, somehow protect your investment. So let's talk about this. What has been happening over here is, you know, A, bears closing their positions out, and B, additional interest of new buyers coming in. Right now, I don't want to be in a bear trade unless we take out the low off yesterday's candle. So in this example, it would be this candle. We took out the low of yesterday's candle. I would somewhat put fibs on this guy and then look to short this guy. This would be us trading intraday, so this candle wouldn't have closed completely, and so we wouldn't really know where it would close. But imagine if you were just trading on this specific day at noon, and this candle just slightly took out yesterday's low. Now, on this day, I bet I would have shorted it. You know, undoubtedly, I would have shorted this candle for sure as soon as we would take out yesterday's low, because lots of buying has come in. And I don't really, you know, so if a candle takes out yesterday's high, that means there's still more buyers piling in. That means there's still more buying interest going on on this day, even on this day, even perhaps on this day as well, even though it closed as a spinning top or somewhat of a hammer or an indecision candle, that's what we could call it. But there's still buyers piling in on this day. No one really is taking their profits. And if no one's taking their profits, guys, what's in it for me? I'm going to have maybe, per 3 buyers, 1 seller. So as a short seller, I don't really want to be in these days with no one in their right mind is selling. Everyone's just thinking buy, buy, buy. I want to be in here when the bulls are scared. I want to be below this candle on this day when the bulls are scared, saying, hey, the guy that bought over here is going to be somebody, well, I mean, the first person to sell when we take out the low off this candle from yesterday. Now, with that being said, this isn't a very good example because you would expect to see a much deeper pullback. However, that was not the case. So this was not a very good example. Right over here, this guy with a gap, well, this gap up got filled. We came back down, we filled it. And then the very next day, we kind of went lower. This is our day to be in bearish. This is how you spot bearish day trades. Now you must ask, well, what if I don't want to be in a day trade? What if I want to find when to spot bearish, when to enter my puts, when to spot bearish trend reversals happening? Well, oftentimes, so currently, yes, we're still some may argue that we're in a bear market, but to me, the way it looks like it, we're going higher right now. We're making higher highs and we're not really making lower lows. So maybe, sure, we pull back, come back up, do this number for a little bit. Who knows? I don't know what's going to happen in the market. But for now, we're just expecting retracement. So now that we have that in place, we've assess the situation first, where we're making higher highs compared to this guy, compared to this guy, the previous pivots where we're making higher highs, so the S curve is in place. That's when you go in and you put your fib levels. In this case, it's reversed because today we were looking for a different trade on it. So I'm going to put my 618 on the bottom. And in this case, we'll move it down to the reverse level. Now, typically, I know that when things reach really strong things, really big bull momentum things, reach things like Tesla and Twitter for right now, reach their 50% retracement. Some things don't even come down to 50% retracement. They bounce right off of the 236. But however, if the 236 gets broken, if we breach this level and we come back down to the 50% and we don't reverse, this is our golden ratio to reverse. 618 is where things typically tend to bounce back up. Now, I know that now that I have that in mind, perhaps we could make 50% retracement a good target level. Perhaps you could make this little double bottom retest neckline, which happens to be somewhat close to our 50% region, your target level. And you could go in and buy puts. Now, to buy puts for a swing trade specifically, or hedging your portfolio, I have 2 specific rules. Rule number 1, we have to have certain days of buying come in, like this one. It can't be a day like this, where it looks something like this and you're like, it doesn't make sense to me, there's not enough buyers in there. So we have to have at least 3 days of buying coming in. We have to be a little tiny bit far away from the 10 EMA. And when we have either a bearish engulfing candle, or we break down below this candle. So after several days of buying, we break down below the first green candle. That's the day you go buy your puts. Now, in some extremely strong cases, you can make the 10 EMA your target, or you can, and in this scenario, it would have been that day. You would have gotten to your target with your puts that day. Or you can make the 236 range that day, your target. Or if you are a much more patient trader, then you can wait till the 50% retracement. In my case, guys, I am a much, much more patient bear trader than a bull trader, which is not how it's supposed to be. I know it's supposed to be the other way around, but I tend to hold on to my bear trades a lot longer. And so this applies in intraday as well. It doesn't always have to be applicable to swing trades. On any time frame, if I see a chart like this, I will definitely short it. We will go look at Tesla's example on Monday, where I took a short on it. It was just wonderful. It just made all the sense, met all the rules. Now, everybody clear on the fact we have to have at least 3 days of buying coming in. So 1, 2, 3, and we have to have either a bearish engulfing candle or a close below this candle in about a day, which in this scenario would have been right, but this is the day I would have bought my puts because we kind of got a clear rundown close on our condition right over here. Now, on a day like today, when we had extreme buying come in yesterday, we're not that far off of the 10 EMA. I have not bought puts yet, but if we have a little bit of buying come in tomorrow, or if we just naturally gap down, I will wait for a tiny little more buying come in and then look to buy my puts. On a day like today, it did not qualify for me to buy puts at the end of the day because we are sort of hovering around the 10 EMA. I mean, look at what, just every time we've kind of come down to the 10 EMA, we've sort of bounced. And so I just don't want to be in a trap situation. I'm looking for something like this, guys. This is precisely what I mean. So imagine this being today. I want some more buying come in, and I want that buying to fail tomorrow with a sharp close below the 10 EMA. That would be my cue to get in bearish on puts tomorrow. If anybody has a question, please feel free to put it up. Yay! Yeah, Peggy says, so happy to see your YouTube blog pop up. Yay, I'm so glad. Okay, cool. All right, so let's talk about a couple of bear trades that we set up. HD, I believe, was a bullish trade, but let's look at Starbucks. This was an official day trade that we set up on our Slack channel. And we got filled on this day. Now, for Starbucks, guys, I am not sure why this gap down happened. Again, I take very little. A lot of people think, oh my God, you must be sitting in front of a computer watching news all day and listening to all of this. None of that is true, really. I rarely know. Sometimes I don't even know what the companies do. I mean, of course, I know what Starbucks does, but sometimes I don't even know what the company does. If the chart talks to me, if it appeals to me, if it seems right, then sure, absolutely 100% I will take that trade. Now, on this day, it was a clear island reversal. So I set up a bearish entry over here. Why? Because there's a gap open up top. If you guys are unfamiliar with gap ups, I highly recommend you look into it or watch some of my previous videos, or you can join me tomorrow on YouTube Live from 9 to 11. I just don't want to get into it what currently, because it could take quite a bit of time, and I don't want to waste time over that. But when we have gap ups like this, they typically tend to act as solid resistance. So what we're trying to do is find gap ups. Now, this is something that you can do on your own. I mean, I love day trading. I could also swing trade. I'm okay with it. Swing trades have not been working out in the bearish direction for the past couple of years, I want to say, because I mean, look at our market. So I've always been a very quick swing trader where it would last a day or two and I'd be in and out. So now I see this candle come in. There's a solid island reversal. For those of you that are unfamiliar with island reversal, that is an extremely bearish pattern. I urge you to look that up and read up on it a tiny little bit more. Now, I spotted that and we set up a swing trade on this guy with a stop a little bit above. Starbucks may have had news, I don't know. It doesn't look like they've had earnings, but something happened on that day. And, you know, when this happened, when this candle gapped down, it occurred, most people would think, oh my God, it has dipped so much. Now is the time to buy. Sure, you were right if you were a day trader or if you bought all the way down here. But if you were one of the top few people that bought all the way here, what happened to you today? Yeah, we collapsed on Starbucks. So on these days, um, anytime, guys, you have a gap down, a massive gap down, for example, Netflix, Facebook, any of these earnings play, anything that gaps down massively like that, I recommend not trading it that day in the bullish direction for one simple reason. Everybody that's been buying over here will look to sell immediately with the gap down. And the buyers that come in will also be a little bit skeptical, especially if it's news related. So there will not be that many buyers versus sellers. So when something like that happens, I recommend people to stay away from it more than likely. Anyway, you get the point. So we set up this trade and the target was just this gap fill area, this bottom gap fill area. And I kid you not, if you come back within a few days, maybe give it another day or two, by Friday, we'll take a look and I will let you guys know if this gap filled and we bounced right off of this area, came back, retested this level and rolled back down, or came back, retested this level and just kept going higher. Either way, we're in and out, we're good to go. Another fun thing that you guys can do for day trading specifically is to spot inside candles. Those are the bomb candles. If you guys are unfamiliar with inside candles, I went ahead and scanned for a couple. So these were a couple of candles that were inside candles that I really liked for today. And we talked about it in our futures room. This was just massive consolidation, a couple of days of inside candle consolidation. And yesterday happened to be a little bit of buying come in, and then today we just failed it. We did not trade this. I didn't take this trade, but just wanted to show you guys this front door. Looks like they've got something to do with front door. I have no idea what this company does, but so there's front door. Now, it also has an inside candle today. It had an inside candle a couple of days ago. We clearly see that it's trying to kind of make higher highs. Now, one may say, oh, but this looks like a bear flag. Sure, it does, absolutely. I do not recommend anybody going long in this for a longer term. However, while it's doing this and forming its bear flag, do you think that we can make a profit over here from here to here? Heck yeah, why not? Yeah, could you stop down here? Absolutely, definitely worth it. That's what we're doing on a lot of things. For example, Shop, Square, we did a trade on that. We did a wonderful, we'll come across certain examples. Let me show you another fun example that's going to be a fun trade tomorrow for our live Netflix. Now, let's say tomorrow happens to be a pretty big bearish day due to some news. I don't know, whatever happens. Tomorrow morning, everyone's just running for the hills. Am I going to short right off the gate? No, I'm not. But I will wait for a little bit more buying come in. Let's say we open somewhere over here. I'm going to put fibs on this guy. So we're going to put fibs on today's candle. And we are going to say, well, if the buyers fail to come in above the 618 range, then we're just going to look to short it around this area. Usually when we have an inside candle, things tend to, just because no one's trapped. I mean, you know, today we had short sellers and yesterday we had buyers. No one's trapped. So we want to see some people trapped. And if we see a 618 level fail, buyers can't push it higher, then we're gonna look to short. How do we find that level failure? Is it just one red candle? No, we're gonna look for high volume red candle that has to be bearish engulfing. Bulls just can't get past that. So we're going to look for trend reversals maybe on a 3-minute chart, maybe on a 5-minute chart, whichever one you're comfortable with. I recommend not going higher than 5 minutes because when you're spotting those reversals, sometimes it could just be quick. So it could just be a 3-minute candle going up there, and then the very next one fails it. So then you've missed your chance on a 15-minute chart. So for that reason, I recommend that you stay away from larger time frames. There's no harm in it, though, if you wanted to, sure. So I'm going to wait for that level to come in and look to short. That's my plan on Netflix. I'm just going to take a sip of my water real quick and pull up. Okay, CI. This has been a monster today. This was a trade I planned on taking in the morning because it was just a beautiful red inside candle. And I took this trade, got filled, and I think it took me about 3 minutes. So 1 3-minute candle that just went and stopped me out. Or maybe 5 minutes, I don't know, whatever. And I stood at my screen, in front of my screen, and just yelled. It's frustrating. So inside candles obviously can go against you sometimes, which is why you want to wait for confirmation. I just like the setup where there was so much buying. It did close as an inside candle, and we were kind of entering the trade below the 10 EMA. So I wanted to just get into this trade and got a little too excited and a little too early. MU was another fantastic inside candle, guys. I mean, look at all of the buyers yesterday, just trapped completely. So a great example of putting your entry over here. And one may say, well, what's my risk to reward if I'm waiting to take out yesterday's low? You'd be surprised. Oftentimes, I can put fibs on a candle and things will go exactly to their 1618 level. In this scenario, it got pretty close to the 2618 level, but 1618 is where I would put my target. So let's say you enter your trade over here, target over here, and your stop perhaps above the 50% retracement level or above here, whichever one you feel comfortable with. But in that scenario, I mean, you have so much more risk to reward. And, you know, oftentimes things will definitely go touch their 1618 level if it fails yesterday's candle, especially if it's a good setup. This was a trade that I took today on O, and this was an inside candle. I just loved all the buying come in. And even though this was an inside candle, it still was a hammer. So I kind of got in. My target was a little bit higher, but I spotted a little bit of reversal and weakness in the overall market. And so I just kind of got out for 0.6 Rs or so. So I didn't really take that. Here's another fun example. This might have been an old line. Sorry, guys. So this is Microsoft for tomorrow. If you guys are looking to day trade this is Microsoft. Does anybody want to tell me, if you can type it in the chat ping, would you be comfortable trading this in the bullish or bearish direction? If you type it in the chat ping, that would be wonderful. I mean, where would you see more risk to reward scenario, in the bullish or the bearish direction? I'm gonna go look at the chat ping real quick. Okay, I'm gonna give you guys a minute. I think we have a lag, so while I'm speaking, some of you may be typing, but I can't really, the lag is pretty, it's about a minute. Honestly, not sure, probably bearish. Jaska says, probably bearish. Well, you know what? You don't have to say bearish just because of me. However, I will tell you, T, why I think of this being a good short. Let's look at this scenario. Okay, so let's say you were a buyer yesterday. I mean, this is ideally almost a shaved top candle. We failed to go higher than yesterday's high. Yes, the previous day prior to this was also a hammer candle. 2 days of solid buying coming in, and then we kind of, sort of, take out the low of this candle. That will entail a lot of these people to sell their positions, especially if they're not looking to hold for long term, which in this news driven market, I don't think a lot of people are saying, oh, now is the time for me to go find investments, find long term investments at least. I personally would not also be very comfortable finding long term investments in Microsoft at this range. So, with that being said, obviously my bias is a little bit more bearish than bullish, but I wouldn't mind trading it in the bearish direction either. I mean, if we gapped up tomorrow, absolutely go bullish. Yeah, 100%. That would be a perfect gap and go. But I think there would be much more risk to reward in the bearish direction. Now, if you're looking for this and saying, okay, well, how far can it really pull down? If you're doing this in a swing term perspective, ideally to 306.38 is where I would take all, or I could put fibs on yesterday's candle and see where its 1618 level is. Okay, right around here. So this is where things, I mean, these are not precise. You need to make them precise if you're OCD, but here you go. So this is where I would take my target. Now, does it matter if we keep going lower, like AMD a couple of days ago went to like its 2618 retracement, which was ridiculous. It just had a really bad weekday. Does it matter if it goes down here? No, absolutely not. No, if you've made your money, you got to get out and not be in it for too long, especially if it's a day trade. So that's the way I would calculate entries and targets. Now, what happens if it's gapping over here, somewhere over here in its 50% range, where it's a little bit above the 618, so somewhere over here maybe, but it's not gapping up above its high. What do we do then? We just don't touch it. That's where inside candles can get you, really. They tend to reverse so quickly. It's because nobody's trapped. So, you don't know which way the buyers and sellers are truly thinking in this case. So you don't know what's going on in a buyer's mind or what's going on in a seller's mind. You want to be sure. Now, on a day like this, when we took out the low of this candle, that was fantastic, you guys. I mean, look at all the selling that came in. Did the same thing happen over here? Not so much. I don't know why on this day we didn't have much of selling. But typically I want to wait for a 3-day then we take out the low of this candle. That's when I want to go in and put in my day trades. Tesla. Let's go to Tesla and look at this guy. So excuse my previous lines. I never take them off, and sometimes they just remain there. We might have had a bull trade today on it. Okay, so Tesla. Now let's look at this guy and see what's going on over here. Massive buying coming in. Obviously, everybody knows Tesla's had a phenomenal run up. And to me, it kind of looks like we're breaking out of this pennant pattern. But today's rejection, guys, is this not golden? I mean, how amazing is this? I undoubtedly think we'll come back and pull back to the 10 EMA. Or maybe even retest this trend line a little tiny bit, which kind of sort of coincides with the 10 EMA. So yeah, yes, 100% short this guy if we have like a little bit, failure around the 618 level tomorrow. If we have a massive gap down to the 10 EMA, definitely wait for a pullback up a little bit, retracement, and then look to short it. But this is beautiful rejection. I mean, it's clear the buyers are kind of scared. What happens tomorrow if we go lower? What's going to happen to all of these people that bought, thinking, oh, Tesla's going to 1,200, or oh, Tesla's going to 5,000? No, Tesla's a unique story. It's looking for a split, and there's all of these other things happening. But this is a fantastic scenario of when to spot bear trades. I would have liked it even more if this was a complete bearish engulfing candle. It's not really, and so tomorrow, if it just does sideways momentum, then I'm not really interested in it. I want to see one way or the other get taken out. If we gap up tomorrow, undoubtedly bullish, absolutely. But I don't think that's the case. I highly doubt it, and if it happens, I'd be truly surprised. But if it does, yeah, 100%, 1,200 would be my target. I would be up to trading it bullish. Etsy also has a beautiful insight candle. Now, unlike some of the other ones, Etsy seems to be doing a head and shoulders and kind of sort of basing out a little bit here, which I kind of sort of like. So I could argue for this guy in either direction. You know, I mean, for me to see this inside candle, I think I want to say my risk to reward is much better off in the bullish direction than the bearish direction. Did they have earnings? Oh, but then they took out all of this earning gap, all of this earning buying just got taken out. Well, then maybe we go lower. I'm not sure. We'll just have to see and assess where we open tomorrow on Etsy. But here's a good example of when not to look for shorts. So let's say if I had a long-term hold in Etsy, from somewhere over here. Never bought a put, did not know what a put option is. Still don't understand what a put option is, but I want to look to protect myself. I've read a couple of books and familiarized myself with put options. And so now I'm looking to buy some put options. Is this the right time to buy put options? Absolutely not. No, we are super low. Sorry guys, you'll hear the little one coughing in the background, but we're super low. And it's just not feasible. This is not the place I want to buy a put versus let's look at a Tesla chart. Absolutely. Yes, if this was a bearish engulfing candle, absolutely. Here's a great example of that, guys. Gap up on top, acting like resistance, gap bearish, almost bearish engulfing candle, and then the very next day rejection. This would have been a perfect day to be protected, to be hedged. Your stops on your put options can go right over here, right above that gap fill. I hope I'm making sense. And if anybody has any questions, please feel free to type it in. Brandon says bearish. Matthew says the trend is bullish, so I would stick to the trend, honestly, but would rather wait for a pullback. I was going to mention that hammer. Can we look at NVIDIA as well? Yes, absolutely. Yay! I see so many people talking in the background. This is perfect. Okay, let's look at NVIDIA. All right, guys. Let's look at NVIDIA. So on this guy, what a ghastly day today. It was a really bad day for NVIDIA today. And I got a good short in today, around 2 p.m. I want to say, but it looked pretty good. Okay, let me take this off real quick and see what happens on NVIDIA. Okay, cool. This guy, so I have not looked at some of the larger SMAs and EMAs. Here, whatever they are, I know they got rejected. There was something over here and that did not work out. There was some chatter about it and I kind of read about it. And I rarely look at it because I'm day trading and they tend to not get in the way as much. But this is an almost inside candle. So I want to see this range real quick, 266. So let's go look at the 15-minute chart for today and see what happened around 266. Let's go look at the 5 minutes. I want to be sure, and I want to show you guys something cool. All right, okay. So here's our 266 range coming. This was yesterday's low, somewhere over here, right around here. And you notice how the volume just kind of picks up on this guy. I mean, look at this candle. If we looked at a shorter time frame, you could get a much more accurate picture. But it's not just me, guys. It's not me staying awake for yesterday's low to come in. It is everybody that's day trading, that's watching these lines, that's watching where did we take out yesterday's high or low? And if so, can we look for a trade? I mean, it's not a coincidence that this candle is so large. The volume isn't really that large. I mean, it's kind of it's up there, but I would like to see a volume like this spike up. That would have been definite confirmation. But I think that did not happen because we had so much selling so quickly. So anyway, I just wanted to show you guys that, you know, when we take out, the previous day's range, especially for day trades, things tend to steam up a little bit. Things tend to pick up a little bit. And I know that there was some sort of SMA, I forget which one it was, but some sort of rejection over here. And so then we just kind of failed. Now, this, my friends, I can totally see tomorrow just kind of sort of, maybe not tomorrow, maybe day after, I don't know, kind of sort of retracing over here. And if it's truly meant to go down, we will retrace somewhat of this candle and then probably look for a rollover. In that case, this would be a perfect head and shoulders. And we could definitely pull back down to its 618 range. So if it is a head and shoulders, if we do pull back up to the 236 range right over here and then fail this level one more time, I would definitely target 618 as my range to look to get back in again, or maybe establish a few shares here and there again. But I don't want to be a buyer in this. This is a prime example. Today should have been the day you should have bought puts. Or actually, as a matter of fact, even when we're taking out this big green candle, this is terrible for NVIDIA. Obviously we're taking this out, we took it out today. So tomorrow I would watch for either continuation or rejection around the 618 level, right over here. I hope I answered your question, Taskia. Or if you have any questions, feel free to ask me that. Sorry about that, guys. Yeah, but I hope this makes a clear understanding of when to look to short. Now, for example, look at this candle, guys. Look at this big red candle. Again, nobody knows how big red candles are going to be. You know, it could just be a teeny tiny one like this, or it could be, you know, the next day continuation kind of candle like this. Nobody knows that we're going to have the 2618 level retracement, but it's always good to be safe than to be sorry. You know, I heard a saying the other day where somebody said, I would much rather be $2 to $3 late than 50 cents early. And that's so true when it comes to shorting, really, absolutely. So I would much rather be a little bit late than a little too early and then have the thing reverse on me. So in this scenario, you're still not too late if you have an established position in NVIDIA. You could do puts tomorrow if we have a little bit of retracement and then look for a rollover. And my target absolutely, undoubtedly, would be the 618 level. If we're going to bounce on this guy, it has to be somewhere around here. I don't see it anywhere else. Maybe a slight bounce at the 50% level. So we could do something like this where we hover around here sideways, we come back down, slight bounce, and then come back down to the 618 level. So we could definitely do something like that, but I think that's where my target would be. And for that reason, guys, I want to be absolutely sure about this and buy my puts at least a month or two out. I tend to buy puts, sometimes I buy them 6 months out because I'm just not sure. On this guy, it seems fairly clean and simple, so maybe a month or 2 out should work, but that's the way I like to trade. I like to spot for very big bearish engulfing candles after at least 3 days of buying. Let's look at some of the other ones that I filtered out. Visa is another great example that's going to come up tomorrow for the YouTube live. And Visa tends to have a lot more of these inside candles that don't really do much. So for tomorrow, I'd be a little bit cautious, and it wouldn't really qualify for my rule of buying puts just yet, long-term puts yet. So I wouldn't really, I mean, for a day trade, sure, I'll keep an eye on it and see where things go, but I would really hope that the futures kind of go up a little bit, and then in the morning we reverse. That would be the best case scenario. Here's IWM. This, my friends, I traded IWM today. What a phenomenal short today. So I have been in this guy short at 209. Right over here. Now, let me turn this off, guys. Okay, I have been short in this at 209. I don't know if somebody remembers me putting that in the chat in the day trading room today, but I was up there and I said 209 is my level to go short. Okay, cool. And then we check out this candle. So this was originally my target because IWM tends to track. I've done massive research. Every time we have somewhat of an inside candle, it just kind of tends to go up and then track back down. So I knew there was bearish interest in the market overall in general. And my stance was bearish on IWM in general. So I went ahead and shorted this. My target was the low of this candle. However, it continued to go down. I actually asked Jeremy earlier, I was like, do you think 203 is very ambitious? Clearly not, you guys, look at this. Got right to my target, 203, right around here. It was towards the end of the day, but it really, and how did I come up with the 203 levels? So let's look at that real quick. I'm gonna put it up on the 15-minute chat pane. Okay, right over here. So this is the 15-minute chart, and this is where it had bounced off twice before, right over here. You have to keep in mind this did not exist at that time when I was looking up here. So my target was right down here, and we were kind of failing that. And so I just went ahead and held my short all the way down to the 203 level. Now, tell me that this is not a fantastic short. Tell me this is not a way to make money. Shorts is an amazing way to make money. If you can be a little bit more patient with your time and trade setups. I mean, surely I don't get setups like this all day long, but bull trades don't really work that well all the times. At least in my opinion. We had one fine bull trade come up on Facebook the other day. And that was a beautiful inside candle. So we set this up as a team, never quite got filled. I mean, if you can imagine agony about not getting filled on this day for a day trade, I had it all. It was ridiculous. I mean, we missed it by what, like a couple of cents on a $200 stock. It was terrible. Anyway, never got filled. And yes, you could have taken this trade right over here. You could have put the level, the 1618 level on it and have it go up. I think it went beyond that actually. Yeah. So you could have taken your target over here. I just wanted to have my setup and I was stubborn, and so I didn't move my entry up, and that's where we got stuck. So, but here's a great example of how inside candles can really, really work in your favor. Double inside candles are also so amazing. Tesla had one recently, but then they opened with a gap up, and so you couldn't really, I mean, I was skeptical on this day. I knew they were splitting, and yes, the news was bullish, all of it, but it was just too many days of buying, and so I did not trade this that day. But I mean, this is a rare thing happening on Tesla. Double inside candles are amazing. It's just massive consolidation, just massive, massive consolidation. And 2 days of option premium being wasted, and then we have a move in either direction. I hope I answered all your questions, guys. Does anybody? Diane says, how do you scan for inside candles? Great question. So Diane, I have a program that I subscribe to called TrendSpider that has a beautiful scanner for inside candles. I know that you can program Thinkorswim. If you use Thinkorswim, you can call Thinkorswim's team, and they can help you set that up as well in their scanners. Or you can pick your few favorites and look at it manually. If you're not a big fan of TrendSpider, I mean, honestly, I use TrendSpider just for that. And in my opinion, I don't think it's worth subscribing to TrendSpider just for inside candles. So yeah, if you use Thinkorswim, you should have somebody help you with that scanner. You know, actually, Diane, if you leave me your email address, I would be able to share my script with you. I did get on a call with them the other day, and I did figure out how to share my script. So I can do this with you if you use Thinkorswim, and if you'd like that, that would be great. Yeah, but inside candles are just essentially, they're my favorite ones to trade because it's sure shot, you know. So let's say we have a this is Tesla, and this is the daily chart, inside candle right over here. So that much buying coming in, one day of somewhat selling, but still ended up as a hammer candle, inside candle, green. 100% this would be a perfect bearish candle if it weren't for Tesla's split news. This thing is just in a massive bull run, and let's not mess with it, you know. Let's not try to short it. But if this was any other day, heck yeah, this is fantastic. Another fun question that I know everybody is wondering: when do we short Twitter? There are two things to this strategy, guys. Number one, we have to understand that this company is here to stay because of Elon Musk. Now, if it was somebody else taking over, let's say if it was somebody not so famous taking over. For example, did you know that the CEO got replaced? Not the CEO, the Twitter's, actually, I think it is the CEO, got replaced just a couple of days ago. They came out and they said, yeah, we're replacing him. So anyway, I did not know that because, you know, I mean, he's not a popular character. He's not a famous character. I've learned this lesson in a very hard way. Not to short or mess with people's tickers that are very, very active and popular. For example, Jeff Bezos. You know, he could just get on the social media or come on TV and say something, and immediately you're out of your short. You just don't mess with those people. Another thing, not to short popular things that everybody and their mom knows about. For example, Coca-Cola. For example, Apple. Yes, it's overvalued. Yes, in my honest opinion, I've seen better products than an Apple phone. Again, just my opinion, but we do not mess with that. None of my shorts ever with Apple, intraday, long-term, swing trading ever work because there's just always buyers waiting. Buy the dip is always active, recession or no recession on those trades. Not to short blue chip stocks. On the other hand, if you guys know how to scan for PE ratio on FinViz, that's a wonderful tool. That's a trader's blessing. Go look for PE ratio that's extremely high on certain tickers that make no sense. You know, for example, Facebook. Well, Facebook still has a way to make money, but Roku. That's the one I've picked on so much because it's just been my absolute favorite to short. Roku. does not make sense. It is not a $400 spa. Absolutely not. PayPal. It was definitely overvalued. Now I feel like it may not be as much. AMD comparatively is obviously weaker than NVIDIA right now. And so the semiconductor, their whole stuff is just in trouble right now. AMD had a beautiful inside candle. And all day I waited for a full run up, and that's why I had an alert level right here that just never quite went off. We got close, but just never quite went off. And so I was really hoping to take it bullish actually in to the 10 EMA, but it did not. It just kind of got rejected. So AMD happens to be the struggling child right now. This qualifies for the 10 EMA trade, guys, if you guys are interested in trading AMD bearish. But I know that there's massive levels of support at 100. That's another thing I wanted to mention, guys. So when something's trading in a channel and it, let's say, so we have this channel in place, that's another lesson that I've learned a very hard way. And these are just lessons that I've learned over time I'm sharing with you guys on shorts. So let's say, because there's this channel in place on AMD, let's say we break it down, okay? So let's say we do something like this. We come back and we test it, and we show extreme strength over here. That is when you wait 2 days against all your impulses and instincts. This is where I would rather be $3 late than 50 cents early scenario comes into play. That's when you wait 2 to 3 days if you see a massive gold candle volume hammer over here. Something like this perhaps, maybe not this because there wasn't much volume here, but something like this guy right over here. And I'll show you exactly why you wait, because channels are usually there's lots of buying and selling happening within this channel that has enticed lots and lots of people. So for IWM, I mean, this was like what, 6-year-long thing. I'm just exaggerating, but you know, it's just been forever. And we have this breakout, and look how many people got fooled by that. There's this guy right here, everybody that bought on this day, everybody that bought on this day, thinking it's the retest, and then there we go. We just came right back down. So imagine this scenario in the exact opposite way. Now, right now, IWM is trying really, really hard to get back into that channel again. With with the double bottom happening, or triple or quadruple bottom happening, and it's trying really hard. However, I don't see increasing value. I don't see a candle that looks like this, that's over there. I see bare increasing volume. So sometimes on daily charts, things can just fool you. So with AMD, I would urge everybody to be super careful, because everyone's got their eyes on the whole number, 100. As a whole, it just works psychologically a lot better. So everyone's watching it, but if we take it out, I urge you to give it 2 or 3 days at least before you decide to go all bearish in it. This can happen to AMD on the bear side too. So just be careful. That's when I know not to short. That's when I know to stay out of it. Let's look at another example on Facebook right over here, and we will wrap it up. We've got about 5 minutes left. If anybody has any questions, please feel free to type in. Okay, here's a good example of Facebook being gappy, this gap down. Now, on this day, when we come up here to Facebook, unless we open with the gap up, maybe somewhere over here, and we create an island reversal sort of situation, somewhat of an island reversal, not a perfect one. Unless we do that, I honestly think this gap is going to act as massive level of resistance. I think we hover around sideways for a long time until we feel that gap, come back down, retest it, and then go higher. Now, does that mean we're gonna, I mean, just because I put this out there and it's on YouTube Live, it could happen in 2 weeks, but does that mean I'm uberly bullish on Facebook? No, actually, I'm actually keeping an eye on this level and see how we interact. If we're super far away from the 10 EMA, if we have 3 bull days in a row, and if we have some sort of a reversal, heck yeah, let's short it there, because this is going to act as a level of resistance. And if we fill this gap, 100%, everybody that's been bag holding over here is going to look to unload, especially if it takes forever. So that's just my thoughts behind it. And that's the way I like to trade up gaps and down gaps. On this day, when everybody was, my husband being one of them, was uberly bullish on Facebook, I actually bought puts. It just made sense. I mean, there's a massive gap down. This is exactly what I mean by Starbucks too. You just don't mess with the trend. And somebody typed it in earlier and said you don't, if we're trading against the trend, you just don't mess with it. Absolutely, 100%. In some scenarios, that works out 100%. But sometimes, I mean, I ideally like to trade intraday a lot more than swing trading. And in intraday, it's kind of hard. For a long time, I had a rule where, if the daily Momo was long, then I would not look to short that. Now, what do you think I found in those days when the S&P 500 was doing something like this around, 2020 post-March crash? What do you think I found then? Nothing, precisely nothing. And we didn't have volatile days like that before. We had actually really boring days. I tell a lot of people not to get spoiled by this volatility. We actually had really slow, boring, low burning, just $1 move on the SPY kind of days. Really boring. And the 2019. And then President Trump would tweet something about China tariff situation, and then we would have a day like this. So, yeah. So I just, trading against the trend is not always recommended. Obviously, it's highly unrecommended. But if you're looking for intraday reversals and things like that, that can sometimes become your friend. But I would want to see some certain setups happen. I would want to see some indicators go off. I would want to see some trend lines being broken before I just jump right in. Essentially, I have a lot more to lose as a short trader than a bull trader, because let's say if I'm in a day trade and a trend that's clearly bullish, and I decide, or I walk away from my computer, my order does not get, I guess there was a mistake with my order, whatever, my target does not get filled, and I walk away. And the market closes, and now I'm like, oh my God, but this was meant to be a day trade, and now I'm holding overnight. Well, guess what? You get lucky, because it's a bull trend. If that happens, a trend is your friend, always. However, in chop fest like this, sometimes that doesn't always, it just does not work. So yeah, no, I 100% recommend trading with the trend being the trend's friend, but for intraday reversals, you can get creative with it. Anyone has any questions, feel free to type it in. If not, I see no questions so far. I am going to wrap this up, guys, and we will see you guys tomorrow for the YouTube Live and take it from there. I hope you guys had a good session, and even if anyone's watching this post this recording, and you guys come up with any questions, feel free to type it in the chat, and I would love to get back to you and answer all your questions. Until then, goodbye, guys. I will see you guys tomorrow for day trading.